Good morning everyone and welcome back to Morning Markets on Thursday the 6th of April. Today we're going to be talking about economic growth surprises and what we think it all means ahead of the US jobs print tomorrow. So we're seeing further evidence of a slowdown in the US. Yesterday's ADP print for employment for the month of March largely backed up what George had spoken to you about previously for the JOLTS data for February. There is a slowdown in the US jobs sector, but there's still underlying growth, particularly in the services sector. And the weakness we saw last month was largely related to the scandals in the US banking sector, where we saw contraction in financial activities. However, more broadly, we're seeing an upswing in growth in Europe and in China. Chinese economic activity is at a record high, and this bodes well for the next couple of quarters as that economy continues to recover from COVID reopening. Consumers get the chance to spend into the summer months. And in Europe, we're seeing tremendous economic strength out of Italy and Spain, and this bodes well again for the summer. And it can be no coincidence that those two countries who felt the least impact from the winter energy price rises are leading the charge in the economic data surprises for Europe over the course of this quarter. And the UK is lagging a little bit, but we're also seeing some economic upswing there as the same purchasing manager indices surprised on the upside for the month of March. And this bodes well as we go into the spring and leave behind the main drag from energy prices over the winter. So what does this all mean for this week? Well, tomorrow, although the UK market is closed, we do have US jobs data, the main non-farm payrolls print. And this is important because along with that print, we also have wages data. And we know that the Fed is as focused on the jobs market is on the underlying inflation impulse within the US. So what the market expects is further robust growth, but a cool down from the data we saw in January and February. But the market appears more braced for any downside surprise because we've now got more rate cuts priced through the second half of the year. And you'll have seen that on screen with a fall in bond yields in the US. And that means higher bond prices as the market is braced for poorer data as this quarter evolves and we head into the summer. However, any upswing surprise on the jobs data tomorrow is likely to temper any enthusiasm for immediate cuts from the Fed at their next meeting in May. However, the skew is definitely for weaker data to back up what we saw in ADP data yesterday and the JOLTS data earlier in the week. So please join us next week where we'll tie up all the US jobs data for you and look ahead to the inflation prints for the month of March. Thank you.